Hi guys, DL Trader here with a video blog. So where am I? Currently pause trading, as you guys know if you follow me. So just thought it would be an appropriate time to have a look at, look back, review, see what I've done to date, and just put it all out there. Why do this? Trading is a passion of mine. It's something I'm pursuing, and it's a journey I think worth sharing. When I first jumped into trading, the first sort of videos you come across are the Tim Sykes, promising to make you a millionaire overnight sort of thing. And I want to create content which is something that I would have liked when I first started, something which is real, videos or content which shows the real struggle behind trading, the real picture, not this sort of fluffy one that these marketers can put out there. So hope you like the content. Hopefully this will be the first video of many. The blog's been great since January, since I started that, so hopefully switching the format across the video might make this even better. We'll see where it goes. So video blog 1, where am I? So looking back just at my sort of introduction, history, journey, etc. I'm from the UK. Was living in the UK until just recently. My background is actually in architecture. I trained at Cardiff University as an architect. Did pretty well. Got a distinction. I was only 2 in the year. I've worked for many sort of some of the top practices in the UK, and then started my own practice sort of 2008, I think. Did pretty well. I just struggled with architecture as a job. It just didn't feel like I loved it enough. I'm not the person to sort of sit and settle. I'm always seeking something more, more than the ordinary. And for me, architect became a very sort of hard-working, service-based business, working long hours. And it's, I'm a creative person, and it just wasn't that creative. The creative part of it was probably 5% of the job. So yeah, so left this, tried to work out a way to jump to the next sort of stage for my goals and for what I was looking for. I've always been about lifestyle. I'm looking for a way to create money which gives me time to pursue the things I love to do. I love to windsurf, surf, have time with the kids. Now that I've got kids, sitting at a job, 10 hours a day just to sit there and pay the bills and be on that treadmill with everyone else does not appeal to me. So I came up with I actually read the book, The 4 Hour Workweek by Tim Ferriss. Great book, recommend it to anyone. The idea, the book gave me the idea of trying to find a product-based business rather than a service-based business, something you could scale. And I actually came across this problem when I moved property. I wanted to fit out a room in the house with desks for my architecture business, and couldn't find a product out there on the market to fit. I couldn't find a desk made to size. So I created the idea, launched a website, an online store called Custom Desk about 5 years ago, and that's been a really good business. At the beginning, it was a sideline to the architecture practice, and then slowly over the last few years, it's become sort of 50%, and then more recently, my sole sort of income. My move away from the UK was really sort of in pursuit of this trading. In England, it's very expensive. We had a quite a nice house with a high mortgage. And I was just working to pay those bills, and I wasn't getting the lifestyle I wanted. For me, England in the winter sucks, and I want the sun and the windsurfing. So it was sort of like the idea was to create the lifestyle and also pursue trading, because living in Tenerife, it's very cheap. We actually sold that house in England to sort of fund this dream. We live currently in a small apartment right in front of the beach, very low costs. And it's great, I've been here for almost 2 years now, and it's really nice to live somewhere where you can live so cheaply and pursue that goal of trading. how did I actually come across trading in the first place? It was when I was working hard to pay those bills, and I was like, well, I need to look at a better way to make my money work for me. So I looked into investing to begin with, and actually came across day trading off of that. And as soon as I came across day trading, I was hooked. You know, this idea of trading stocks very quickly in order to make money, and the sort of the unbelievable scalability of an idea like that. You know, you don't put the extra hard work in for more money, but you just get better at something. You know, it's a performance-based idea, which I'm particularly into. So found day trading, got instantly hooked and started reading about it. The first things you read, as I mentioned at the beginning of this video, you know, Tim Sykes videos, Warrior Trading, these sorts of things sort of suck you in and aren't particularly helpful. I mean, Investors Underground I came across much later, and they were much better with their sort of tutorial content. But for me, these sort of places, these chat rooms just didn't work. Trading is all about self-discovery. You've got to try things, work out what's working, refine. I did come across Tim Gritroni's DVD Trade the Ticker, and I'd say after I watched that video, things did start to click more than they had before I watched that. Something about that DVD made sense to me. So I'd highly recommend that to any new guys out there. But like I say, you know, quickly I realized that chat rooms don't work, and I had to do it on my own. So software such as TraderView, where you import your trades, analyze them, and Trade Ideas, which is the scanning software, are tools which give you the ability to grow and to refine, and gives you that edge. You're better off, in my opinion, spending the money in these sort of tools rather than the chat rooms. Chat rooms for me, big mistake, just don't work. So into my trading career and what I've done. So I first started at Shaw Trader, like most people I suppose, from February 2016, for sort of 6 months of the, you know, half of the year. Lost money straight away, you know, very small accounts, 500 quid, $500, $1,000. Lost a couple of accounts, you know, reloaded them, recharged them, and lost it again. At the end of that phase, there's a date wrong there. That's actually 2017. So it was over a year. That makes more sense. That's right. So after I lost that sort of the third account, I quickly realized something had to change. So I was like, said to myself, I am not going to invest or risk another dollar until I can actually prove that I can do this. So I switched over to a demo account with DAS. It was great. I used that DAS software with Shaw Trader. It's real market data, so that's helpful. And I embarked on this paper trading journey. I actually documented this whole thing on Instagram, images, reviews, videos, etc. So you can always check that out. And I said I was not allowed to risk another dollar until I had 3 consecutive green months. And started that paper trading experiment. First 2 months were red, and then the next green, bigger green, and it took me, I think, 5 or 6 months to get those 3 consecutive green months. So after that, it was back to the real money, and I thought, you know, here, we can give this a good go. That was when I opened an account with TradeZero in January 2018, and went with them up to June 18. At that point was when I started the blog. So, you know, I documented the paper with the Instagram account, and then I really wanted to share this next stage of the journey, which was when I started the blog in January. People who follow me, you'll see that I had some good success with TradeZero, particularly in the early months. Grew the account quite nicely, but, you know, couldn't sustain that performance, and then you get eaten by those fees, and I could just never seem to scale that account. When I ran into those problems, I sort of seeked a new way, you know, looking for a new way to trade, you know, a different account which gave me more benefits, which is where I came across Trader Equity, and I had an account with them from July. You know, for those of you who don't know, Trader Equity is a platform for remote traders, sort of. So it's very different to the traditional brokerage account, with many benefits, which I'll come on to in a minute. But They provide you with mentoring, help you work on your strengths and your style of trading. But my time there wasn't easy. No fault to them. I can't fault their service at all. I'd highly recommend them to anyone. It's just I could not during that time seem to pull it together. So, Trader Equity, the reasons I went with them were for four main reasons. The first was with the reduced risk. So, with Trader Equity, you're actually trading the company's capital. So as a result, they keep an eye on you, and they have sort of a control on your risk. So you set, for instance, there's a max daily loss in place, preventing you from doing stupid things when you're in the red and making those emotional decisions. You've got reduced fees, much lower fees than the traditional brokerage accounts, and also these fees will reduce more and more as you scale up. You get that mentoring, which is obviously in there, but it's free of charge. It's not a service that you're effectively paying for, and it is definitely helpful. You have to be careful, I think, with mentoring and not to lose confidence in your own ability and your own ideas. That's something that definitely happened to me while I was there. But having a good professional trader help you is really really a benefit. You've got the ability to scale. With a prop firm, you're trying to focus on trading well rather than making money. You can you've got a fixed buying power which can grow regardless to your profits. So you can pull out your profits from the month, but your buying power remains or even grows depending on your performance. So you get the payout and you also get the buying power. With a traditional brokerage, you've obviously got to grow that account in order to grow your buying power. So at the end of August, I ran out of money in with that account at Trader Equity, and I've had to pause live trading until I can afford to go again. So my in the other areas of life, I'm struggling a little bit with my finances. And I think that is partly to blame for my recent failure to grow my profits. But it's not over. The game isn't over. I'm dedicated to succeed at this, and this is part of why I'm doing this video right now. It's that has happened. I'm putting a full stop on that account. That was part of my journey, and now I'm focusing on the next part. So what to do now? Well, as I say, no money, so I've got to take this little break, which I think is probably a good thing. It allows me to reset, regain my composure, my thoughts. I am considering going back to simulated trading. It's certainly helped me before, and I think it will help me again. What I want to get from this next phase of simulated trading, slightly different to what I did with the DAS paper trading experiment. When I went into DAS, I didn't really know what I was good at. That DAS experiment showed me my edge. It took me through 6 months to work out what I was good at, what was my setups, what were my strategies. Now, for me, the next phase, the simulated trading, hopefully not for too long a period, is about refining my edge, taking those things that I do well and make money on and making them better. So what exactly is it that I trade, my style, my setup, etc.? I like to short the low float stocks. For whatever reason, this seems to be where I make all my money. If I'm long, I just can't seem to get them right going long. I make all my money shorting them. So that's what I'm focused on. It's just exactly, the refinement of exactly how, when, why, for how long, etc. So the pros of trading these low float stocks, for me, are the big moves that they put up. They put big moves in for big gains. We want range on our trades. So they certainly provide the range. You see these things moving hundreds of percent rather than these small moves. And there's usually something in play, and not too many. The stock market is a big place with many, many stocks to trade. I like coming to the market each day with potentially, between 2 and 5 stocks that are the hot ones, the ones in play. And I can sort of put my focus onto trading those well rather than looking to try and trade 20, 30, 40 stocks or whatever. The cons, They're definitely dangerous. They put in these crazy moves. If you get stubborn, you know, you're not keeping an eye on your risk levels, stopping out where you should, things can get very dangerous very quickly. There's also can be very dodgy price action. You know, as traders, particularly me, I look for I trade patterns, technical analysis. I don't really look at fundamentals at all. I look at the float, but the other filings I don't currently read. Not saying that's a good or bad thing. And that dodgy price action can be tricky. You know, you might have a big spike and something does a crazy dump and you think the game is over, only they push it straight back up and trap all the shorts and it goes way higher. So you've got to be careful of those dodgy price actions. So the questions I'm asking myself on how to develop my edge and refine it. For me, a question mark I've always had is position sizing and time frame. How long should I hold positions for? Should I be scalping them super quick, in and out, in and out? Should I be taking an entry and leaving it for 5 days? Now, it's not something I've really been able to do before. When I was with the Trade Zero account, they charge 7 times borrow fee for the first overnight swing, which is crazy. So the only time, I think I did it once from one of my biggest gains to date, in fact, and it was a higher price stock, so you need less number of shares, which makes it, you know, mathematically viable. For a $1, $2, $3, $4 stock, taking a small position of 1,000 shares with 7 times fee overnight is just nuts. So it might be something that Trader Equity will help me with in the future if that proves to be a good, successful refinement of my strategy. I mean, at the moment in my head, the thing that I have going on is trading the way I did when I was doing well, which was shorting these low floats on parabolic spikes, be it day 1, day 2, day 3, locking in gains on the pullback, but then leaving partial on a swing. So you've locked in gains on the trade, you've got your risk set at break even, you've got a big cushion on it, so if it does gap up, you know it's going to gap up to back up to break even, or worst case, you know, higher. Still, you've got the green part of the trade locked in, so you can work against that. For me, when I look back at all my trades on TraderView, when you've got these trades in a risk-free position, i.e. you've locked in green, you have the cushion, and you cut them, you're giving it away for free. Like, what would you do to get into that position? It's crazy. So for me, this is probably the number one thing I'm going to focus on this next simulation. So next is trade management. How do I enter, exit these positions to maximize on profits? So I've done a lot of work in the last 8 months on exactly how I enter and exit trades. You know, do I scale in? Do I take one entry with defined risk? Do I scale out? Do I look to cover some and add back on? So it's the trade management that I'm going to look at as well. So I think that's it, guys. That's the last slide. Hopefully you like this video. It's not the end of DL Trader. I will be making more video blogs talking about this simulation and how I do with these new refinements. I have heard that Sterling Pro are putting out a new simulation package, which we might get up and running with Trader Equity, which would be great, staying on the same platform. But if not, I do have a DAS and the ability to go back to DAS for their real market data simulator as well. Any questions? Hook me up. And I hope you like this content. Feel free to let me know if you do or not. Okay, cheers.